Welcome to You and Your Money. Today's episode features Leisl Langevin, Managing Partner Advisory at WHZ Strategic Wealth Advisors.
Let's talk about year-end tax and financial moves. What should we focus on right now, Leisl?
Well, first, know your tax bracket. It's a tiered structure, so starts at 10%, and so it goes up pretty high to 37%. There's a big jump between 24 and 32. So anyway, you might be in that sort of threshold where you could hit, if you have taxable income as a single filer, about 197,000, and as a joint filer, about 394. So when you combine, if you have a spouse income, you could potentially get up there. So you want to think of things like deferring income or potentially taking deductions that could help as well.
Okay. What about retirement accounts? What should we be thinking about right now?
Yep. So exactly, that's one way to reduce your income, and so some planning opportunities there would be to make contributions to, if you have a 401k, take advantage of it at your workplace, and you can save up to $23,500 in that 401k, and also $7,000 in just a regular traditional IRA, and that's going to reduce your income. So if you're making $100,000 and you save that $23,000, that reduces your income right off the bat. So
what about catch-up contributions? We talk about that.
Yeah, exactly. So these are for the people that are in their AARP era, I'll say. So if you're over 50, you can contribute another $7,500. And they created a super catch-up with one of the Secure Acts, where if you're between 60 and 63, you can save up to $34,750 in a retirement account. So that's huge, because that's probably when you're in some of your highest earning years. But you also get an additional $1,000 catch-up for IRAs. So that's really important too.
I think recently in a past show we were talking about health savings accounts. Are those still valuable for financial planning? Oh,
definitely. Yeah, and these are great. I mean, we call them triple tax advantage savings, and you have to be in a high deductible health plan, so that's the only caveat there. But you put the money in pre-tax, so it goes in, it's not taxed. It grows in there tax deferred, so it's not taxed while it's in there growing. And then when you take it out for medical expenses, it's not taxed either. So those are really huge. The contribution limits there are $4,300 for an individual and $8,550 for a family coverage. Again, and if you're over 55, of course, they don't make the ages match up. They have you guessing all these different ages, but you can add another $1,000 for that. And the cool thing about HSAs is that you keep them. There's FSAs, which are flexible spending accounts, and those you have to use it during the year. These can carry over. So pretty cool.
How about investments outside retirement accounts? Any strategies there?
Yeah, so if you have an account that's a non-retirement account, typically what we're doing for our clients at the end of the year is called tax loss harvesting. So this year, probably not going to have a lot of that, because the markets are all up across the board. So, but what you do is you potentially take some losses in your account. So if you have, for whatever reason, a stock that's lost money, I mean, you try not to do that, but you could use that and it would offset any gains that you've taken. So,
how about charitable giving? That's a big deal.
That is a big deal. And with the recent OBBBA, there's a deduction that you can take. So typically, it used to be that charitable donations, you had to itemize to really take advantage of those charitable, but there's a special provision in the recent legislation that allows you to take, if you're single, a $1,000 deduction or a $2,000 deduction. But honestly, I mean, it's a great way to reduce income. Typically, you have to make a larger contribution to really make it worth it, but there is that new legislation that allows you to do it, so it's pretty cool.
And then switching gears a little bit, what about withholding or estimated tax payments? Talk about that.
Yeah, so this is a big one, especially if you're a small business owner, and keeping track of what your income is throughout the year, because you don't want to pay too much in taxes. You're giving an interest-free loan to the government when you do that. So you try to level it out. Cut it close. You either owe a little bit or you get a little bit back. And so if you can review your estimated tax bill throughout the year, that's a really good way to do it. So then you're not paying too much. Usually third quarter, fourth quarter is when we're doing that.
You don't want those surprises when it's time to file.
Exactly.
Okay, so what's your biggest piece of advice this morning for our listeners? And because we covered a lot here today.
We did. I know it ranged from taxes to charitable to retirement contributions, but those are all the ways. I mean, you could manage your tax bill by making sure that you're, again, paying the right estimates and that you're on track so you don't get penalized. From a contribution standpoint, taking a look, how much can you contribute to a retirement account, whether it's a 401k or a simple or a SEP IRA. So those are all really helpful as well. And then, just making sure that you're on track of all of your income and where you are, so that you can either, if you need to, as a business owner, could take some payments in January if you had to.
Good to know.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Marrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.